One of the worst hit is South Korea's Kospi. It dropped more than 6% on Friday, its biggest daily percentage loss since the global financial crisis in 2008. The losers on the Korean exchange were mainly exporters, led by the country's biggest car maker. Hyundai shares fell by 10%. Analysts say the sell-off is due to fears of another global recession and failure to solve the Eurozone financial crisis. And for the same reasons, investors fled the stock markets in Japan, Taiwan, Hong Kong and Australia. By the end of the trading day, about $40 billion was wiped off Sydney's ASX.
Almost $2 trillion of wealth has been wiped out.
From the highs, yes.
From the highs of the market. One thing.
Role of China. I think you can make a case now that China made a three-pronged decision that they would not let the euro go down. This was for technical reasons. The Chinese were essentially rebalancing this basket that they used to keep their currency stable, and notice it has not gone up compared to the dollar, so they were buying euros for commercial reasons, and also they made a political decision that they wouldn't let the U.S. destroy the euro. And specifically, they were buying up Greece. We have the Chinese vice prime minister visiting Greece in June, going to Piraeus and signing all sorts of deals, shipping, telecom, containers, all kinds of things. And development projects. We have a very interesting quote from the Greek deputy foreign minister after meeting with his Chinese colleague. He says, the Chinese wanted a gateway into Europe. They're not like these Wall Street blankety blanks always pushing investments on paper. The Chinese deal in real things, merchandise, and they will help the real economy in Greece. So tangible physical production. So the Chinese have been buying up Greece at very good prices, right? Very low prices. And the Anglo-Americans are beside themselves because their attack on the euro is not working because the Chinese are supporting the euro by supporting Greece and these other countries. Another aspect of it, though, is the forces of depression remain there, right? $1.5 quadrillion of derivatives centered mainly in New York and London. They are going to explode sometime soon. The big question is, where will the first explosion take place? Now, there's something going on with the Hungarian forint in the last couple of days. If Hungary is where the explosion comes, then the euro could indeed go down. That's still a possibility. But it's more likely in New York. If you look at the Bank of America chart over the last couple of months and look at these banks today, you'll see that Bank of America has a very ugly chart. Citibank, there are rumblings about Citibank getting into trouble in September, October. If it turns out to be Bank of America and Citibank, then the dollar will be the one that goes down. In other words, the only game in the world right now is beggar my neighbor and dump the depression on somebody else. So they tried to do it with China. The Chinese have kept the renminbi stable. They tried to do it with Europe. That won't work. Sooner or later, something is going to blow. And wherever it blows is going to be the next currency that will go down. And, of course, the dollar and the pound are likely, but the euro is also possible. The yen is at basically an all-time high today. It's at a 15-year high compared to the dollar and a 9-year high compared to the euro. But for the Japanese, this is a terrible thing because their currency is so high that their exports are being strangled. So this is currency chaos and a world depression. And we would be very good to get back to the Bretton Woods system, the thing that ended 39 years ago when you had fixed parities and you didn't have this kind of chaos of floating rates.
Thank you very much indeed for your time. Thank you for joining us.